welcome Mr. Ramakrishnan Padmanabhan from IFSCA to enlighten us on the impact of recent geopolitical events on precious metals market. Sir is an expert in the global precious metals market with nearly 2 decades of experience in banking, bullion and market strategies. Currently, he is serving as the General Manager of the Department of Metals and Commodities at the IFSCA. Please, sir.
Yeah. Oh, okay. So what I am going to do now is just a follow-up of what Gurumurthy sir told in the morning. So more so with the data and little bit of tectonic shifts that are happening in the precious metals ecosystem, plus also gold as one of the most important asset classes. So quick one. As he mentioned about Pliny the Elder was the Roman philosopher and also a military strategist who actually told that India is actually becoming the world's sink as far as gold is concerned, because of the fact that a lot of spices used to be ordered by the Romans and in return they actually had to give gold. JP Morgan, when he was asked about credit, JP Morgan, as many of you must be aware, is one of the largest in terms of bullion banking at this point of time. Even at that time he had clearly mentioned that money is gold, nothing else. What we are seeing after the fall of Constantinople is most of these guys were not able to go through the land routes. So that's how the Europeans started looking for an alternative route. That's how they came to India, and that's how exactly the trade routes has been established with India by many other countries over a period of time. In terms of the world's reserve currency, if you actually see now, whether it's the Netherlands guilder or the Great Britain sterling pound or the US dollar, vis-a-vis when you see the gold, everything is depreciated over a period of time. This actually shows that no currency is going to be the strongest in the world at all times. Everything has got a birth, maturity and decline. And now we are observing whatever the cycle has been for the other currencies. However, in case of the dollars, it has taken a little bit more time. If you see in terms of the real returns, when you compare the investment into their government securities, from 1850 to present, you have seen a positive return for gold vis-a-vis the G-SECs of these countries. Whereas in case of 1850 to 1912, you have seen that the G-SECs have performed better than gold. However, overall if you see, it seems that gold has outperformed. So again, a little bit of the history, because of the fact that geopolitical scenario was affected at that point of time. All the currencies, as was mentioned earlier, was linked to gold. So most currencies had a legal minimum ratios of gold issued on the basis of whatever gold that they held. It was pegged to the gold. And whatever current country was running as a deficit, there was outflow in gold, and the country running surplus was having an inflow of gold. Now, when they realized, the US probably started realizing over a period of time that yes, you needed to have the war chest in place. They declared that anybody privately owning the gold will have to give it back to the government. So in 1933, the order came, something similar to our Gold Control Act, where in which the gold standard as is actually ceased to exist. This is a very important picture. You have Franklin D. Roosevelt, you have Ibn al-Saud, who is the monarch of Saudi Arabia, and they actually came together. There was a security arrangement at that point of time that they would purchase they would actually secure the Saudi Arabians. In return, the oil will be supplied to them. Probably this could have been the base for the petrodollar to later come into being. What happened thereafter came the Bretton Woods system. You had the gold being fixed at $35 per ounce, and again Gurumurthy sir mentioned about that the fact that inflation increased and gold was privately traded at a higher rate, the prices became too high for them to control, 1961, the London gold pool was formed. So they wanted to artificially again reduce the price. All of them started pooling the gold. But still they were unable to defend that price of gold. Eventually in 1971, President Nixon announced, I think it's 15th August 1971, the correct date, that the US would end the pegging to gold, and then it went on to the fiat currencies. SDR was created, and thereafter, as we know now, dollar is now the king. What happened after 1971, if you observe, you see the Gulf War, or in fact the Iranian Revolution, because of the fact that the London gold pool was there, and a lot of there was systematically selling of gold also happening, because dollar became the new currency, and therefore there was not much happening in 1990s when the Gulf War was there. Thereafter, if you observe, since 2007-8, during the global financial crisis, the price of gold has started rising, and thereafter in the COVID times, the gold has actually exploded. You see the year-to-date numbers as far as gold and silver is concerned in terms of precious metals. 33.7 is the rate of return that gold has actually got year-to-date, and 42.4% is the rate as far as silver is concerned. As far as gold is concerned, I don't know if many are aware, physical is different from unallocated. That is a major difference, because physical gold, there's not much of physical gold above ground stocks to be traded. It's mostly derivative. It's form of a derivative which is traded in London. 95% of it is actually a derivative, only 5% is actually in allocated form. You see how the gold prices actually have impacted because of wars, whether it's the Russia-Ukraine war or Israel-Hamas, and now almost, in fact last month it was around 2,800 per ounce. That is what it has come to at this point of time. This is a more wider in terms of what kind of issues have happened over a period of time which has actually impacted the price of gold. With regards to gold itself, because of the fact that prices have been impacted because of geopolitical events, whether it's safe haven impact, there's no credit risk as far as gold is concerned, because holding any other currency will have some kind of a credit risk. Negative correlation when it comes to the stocks and bonds, it's an inflation hedge, liquidity is there. Cultural value as far as India and to a large extent even Chinese, and it's a part of a reserve currency like the dollar. Demand comes in form of wars and conflicts, trade disputes. We don't know what will happen next in terms of when Donald Trump takes the office. Political instability. We had a situation of Syria happening today. We don't know what will happen there as well. Natural disasters. We have seen COVID as an example. Recessions, global debt crisis. Anything to do negative, the gold goes up. We are actually looking at a tectonic shift as far as reserve currency is concerned, whether it is moving to the safe haven precious metals. That is what we have to see. What has happened is that the Russians being sanctioned by the Western powers, and what seems to be happening is that there seems to be a shift towards other currencies and monetary assets which have no counterparty risk, like gold and silver. And this has been actually provided by the Silver Institute. So I don't know whether you are aware, but Isaac Newton at one point of time was the master of the Royal Mint, and silver at that point of time was used as a currency, but he linked silver to gold, and thereafter what happened was gold eventually became the main currency rather than silver. So he did a mistake of pegging silver to gold. We are seeing a massive debt, global debt levels as far as even the US national debt or global debt is concerned. However, the total market value of all the above ground stocks of gold, which is actually in terms of marketable quantity, that is in form of bullion, bars and coins and ETFs and other investment, is approximately 18.42 trillion only. So does this mean that gold is actually undervalued at this point of time? Is a point to ponder. As far as the key events in terms of people, the countries moving into other currencies. These are the reasons. One is the US sanctions. During the Kazan declaration in the BRICS, there was a support that NDB should expand into local currency financing and multilateral arrangements and also trading bilaterally. If I am not wrong, 18 countries is what India has signed an agreement with in terms of bilaterally trading the rupee. And the UPI is also now operational with around maybe 14 odd countries. So every country is now looking to operationalize their own currency. Russians are looking to actually operationalize their ruble in terms of settlement with India. Whereas India also wants to do likewise with them. They are saying that utilize the rupee for settling the transactions. So this is what we are seeing. Going forward, we will see this expansion or moving away from the dollar over a period of time, and it could go into gold as well. In fact, the Indian government has also now told in the budget that the government will use Indian rupee for overseas investment as well. There are limitations for any central banker. Either you have rate cuts for inflationary growth, or you reduce your debt. Now, reducing the debt could be through austerity. You must have observed the DOJ. What is that? Elon Musk's team is coming up with. Elon Musk and Vivek Ramaswamy is coming with. Yeah, so they are looking to actually get into austerity and reducing the debt, reducing the bureaucracy, reducing the expenditure. It is possible that they are looking that way so that it could actually reduce the fiscal spending, and the fact is that at some point of time it will actually reduce their capabilities on expanding into infrastructure. Paul Walker in his op-ed actually mentioned that this is in 2016 in fact, that the current debt may be manageable at the time of unprecedentedly low interest rates. But if we let our debt grow and the interest rates normalize, the interest burden alone would choke our budget and squeeze out the essential spending. I feel that eventually that could happen if the new department that is conceptualized is coming out with austerity measures. Is it de-dollarization that we are going to talk about in the future? We don't know yet. JP Morgan says that yes, there has been a proof that people are moving away from the dollar, but not much yet to say that it's going to end the dominance of the dollar. It may take decades. Federal Reserve also had come out with a paper saying that the dollar will likely remain the world's dominant intellectual currency, international currency. But the fact is that I think this also came probably after World Gold Council also coming out with some kind of a paper that gold is becoming something like a dollar alternative. I'm not very sure about that, but there are possibilities that somebody had to rebut that statement that gold will become a major currency. In terms of the trade, yes, dollar is still the king at this point of time in terms of foreign exchange reserves, international debt, loans, invoicing, international payments, FX, everything, the payment is in dollars. However, if you see the share of the other currencies, you actually see a marked increase. Earlier it was the dollar alone, but you have the Australian dollar, Canadian dollar, Swiss franc, renminbi and the other currencies. INR could be coming in the basket of the other currencies, and there is a possibility that this is only going to increase over a period of time. As far as the dollar shares in the global reserves is concerned, earlier it was around 70 odd %, which has now come to around 58. The official holdings, interestingly, if you see US, one of the largest, 74.3% of the total reserves is in gold. Germany 74 odd, Italy 70.5, France 72, Portugal 77.1. Even a small country like Uzbekistan is at around 77.3. As far as India is concerned, it's still only 10.2%, and the Chinese could be around 5.4%. That is what the figure is. Is there the scope for the gold as a reserve to move higher? There is a possibility. In fact, if I actually look at Poland, one minute, is it front? Oh, back. If you see Poland, they have actually mentioned that they have to get to 20%. It's currently 16.2%, and Polish have been one of the largest in terms of purchases in the last 2 odd months. Central bank demand, the European seems to be actually selling since 1992 to 2008, many of the European countries, but that has been grabbed by the Russians, Chinese, Indians and the Turkey. So if you actually see the amount of gold bought is around 1,888 tons done by the Russians, the Chinese are a bulk, the Turkish and the Indians, and that's around 5,623 tons over the last 30 years. Holdings, it has increased by the Russians and Chinese. The same countries are now buying. The interesting case has been the Polish. We don't know whether it has to do anything with the Russian aggression which is happening in Ukraine, but they have been one of the chief moppers as far as gold is concerned in the last 2 odd years. We have just plotted how much gold purchases have been done, and the large purchases have been the Asian giants and the Russians. Some of the key media coverages we are coming is gold is the last haven of the treasuries. IABX has been told as a game changer as far as Indian markets are concerned. BRICS have been asked to, are actually looking at increasing the turnover of the precious metals trade and the quality standards. India has actually brought back their metal almost 200 tons from the UK. Hong Kong is trying to become a hub for the bullion trading and vaulting facilities. Mohammed Al Arian, one of the fund managers, has been talking about why we should be paying a lot of attention to gold prices. Donald Trump is asking to pay off the national debt. Mark Mobius is saying that 10% of the investment should be in gold. Gold repatriation is now shifting from north to south. Gold vaults are opening up in many other centers like Dubai, Singapore. Even Hong Kong is now looking to increase their vaulting infrastructure. I mentioned about this 10% portfolio allocation yesterday as well. So around what we have seen here is that the financial advisors actually are talking about keeping gold in physical bullion form. So they are around 68% of them are actually recommending that gold be purchased and put as a physical asset. This is actually a study by the ETF world, I suppose. Recent statement of Donald Trump, it is not going to help the dollar. In fact, it is going to be a threat in a way. So people will still move to the other currencies as well. And as far as Bangladesh is concerned, interestingly, like what used to happen earlier during the Roman Empire, now we are seeing that gold is actually being used in terms of for smuggling of rice. So rice is being smuggled by the Bangladeshis in return for gold. So something similar used to happen in the olden times, which is what we are seeing once more. What is happening in the USA? There are states which have been saying that we need to push for gold. In Missouri, there is they have told that legal gold itself must be used as a legal tender. So we don't know what each state is thinking because of the fact that it's a federal kind of a structure that they have. Reserve locations, again, repatriations have been happening over a period of time. Earlier it was with the Bank of England and the Federal Reserve of New York. Now each country wants to hold its own reserve, similar to India. We have heard that other countries are also moving in the similar fashion, whether it's the Italians or maybe the Polish. We are seeing that slowly they don't want to keep their gold in a third country. central bankers across the world, the Czech National Bank has been saying that we need to reduce volatility, and therefore we need to have gold as an asset class. And as far as the Poland is concerned, they are saying that we are entering the exclusive club of gold owners, and they are proud about it. Serbia has been saying that we need to have it safe and secure. And Germany has also been saying that we need to have a stabilized monetary system, and therefore we need to look at gold itself. As far as the geopolitical risk factor is concerned, we have still many aspects to be covered in the next maybe 2-3 odd years. We don't know what will happen between US and China, because of the fact that Chinese are still looking Taiwan as their Jagir or whatever. They will at some point of time try to invade it. So that is a huge geopolitical risk. As far as Russia-NATO conflict is concerned, I had talked about Poland earlier. There are possibilities of war escalating there as well. You have the Middle East regional war continuing even today. We have heard that. You have the cyber attacks that is being caused. We have North Koreans or even the Russian cyber attackers coming into the news. We have climate policy gridlock. Now Donald Trump is saying that we need to abandon anything to do with clean energy. So all these things are a very high likelihood in the next 2 odd years. So the risk is high, and therefore gold also will have a positive movement in the markets. Factors affecting the changing world order will be the education, competitiveness, technology, economic output, share in the world trade, military strength, etc. However, financial center strength and reserve currency could become the most important factors, because going forward we don't know, in fact this will be the bedrock for any country to become the world leader. That's one of the reasons that we are trying to set up a financial center in GIFT City. So we are also trying to create, we also have a unified regulatory authority as IFSCA, trying to bring in all the financial intermediaries, the banks, everybody to come and set up their offices, because of the fact that the financial center strength is very important for a country to show itself as a global leader. That's it from my side. Thank you.
Thank you, sir. It is always great to hear from IFSCA on these aspects.